Only ICT will know how good this video is. Continue watching and you'll find out why. Last up close candle gets swept here. Becoming a shift in market structure. This last up close candle becomes a bearish order block. You map out the mean threshold. We trade up here, here, and then we give up the ghost. Going down to the H1 for liquidity. What do we see? We see a sweep right here. Price comes lower, lower, from high to low. Price trades up into a premium. This mean threshold of that daily order block can be refined. This is a fair value gap here, and then there's these last two up close candles. So fair value gap. And then I'm gonna bring this up here. Actually, I'm gonna keep this. These red levels are my daily levels. And then this order block is going to be a black bold line. So that's where your inception starts, basically. Down. Okay, as you see, we swept that low, creating a shift in market structure, allowing that mean threshold to be a resistance to price, calibrating it up into a H1 bearish order block. Price hits it, nice bearish candle, up candle, bearish candle, up candle, then we give up the ghost. Now you can see that institutions have stepped in the game, and this was just way too quick of a manipulation for me to get in London. And I didn't even wake up for London today because I knew New York would have some news, and there's a trade every session, guys. You just have to have an algorithm that specifically tells you when to buy and when to sell. And you just have to base it off of institutional order flow and IPTA. You guys can learn that at ICT Inner Circle Traders channel. I'm just giving you guys the rundown. Price then makes a low at 7 o'clock, 8 o'clock. If I look left, I see a fair value gap and I see a last down close candle. But none of those is what price is referring off to right now. It's actually referring off into this rejection block down here. This last down close candle, or the lowest down close, could be here too, but last down close, that's what we're using. Price hits it, and we don't know if this is going to give us a reaction, so we have to go down to a 15-minute chart. On a 15-minute chart, what do we see? We see price taps at 8 o'clock, breaks above this last down close candle. So just like on the daily, when we went and broke the up close candle and it became a bearish order block, price is fractal. We have a bullish candle breaking a lower down close candle, creating a shift in the market structure, allowing this to be a bullish order block. Now I draw it out. Now this becomes a buying opportunity. Where's my little thing at? Yeah. This becomes a buying opportunity. Boom. On the dollar index, I drop down to a 1-minute chart. That should be a 1-minute optimal trade entry. Just like how the dollar index on the daily chart, that level became a hourly optimal trade entry. So you see how price is just fractal, and you just have to refine the entries and refine these levels, and you'll just be trading from low to high every time. So from shift in market structure, as we said, This is our displacement from low to high. We're looking for a retracement back down into a discount to buy it. However, you see that price does not trade down below the 50%, which is fine because it's not going to key off below the 50%. It was only keying off of this fair value gap right here. This fair value gap right here. And as well as this breaker. This breaker block. So wherever you got in, stop. Oh, we don't trade the dollar index, but if you were trading the dollar index, low, high, that's a buy. And look how price just rallies from there, taking out all the sellers, all the buy side liquidity, all the buyers, all the buy side liquidity, right? So yeah, that trade allowed us to catch a nice sell on the euro dollar. Go to the daily chart. As you can see, bullish candle breaks this this down close candle. This down close candle becomes a bullish order block. You can draw out the high, the open. But if we drew out the mean threshold for the dollar index, wouldn't you think we have to draw out the mean threshold for the euro dollar? And where is that at? Sorry guys, right here, mean threshold. Okay, so that's the mean threshold. As you can see, we can already tell what we did today. Let's go to that H1 chart. H1 chart, as you see, this is that mean threshold, low to high. We trade down into a discount, just the opposite from the dollar index. We trade down into a discount, fair value gap, last two down close candles, bullish order block. Let me delete that. So when price trades down to this bullish order block, we are able to buy it, but we can't just buy it we can't just buy it just because it hit this. Well, we could, because that daily level, we refined it into these last down close candles, a bullish order block, and we knew that the dollar index was also predisposed to go lower. But as you know, I did not trade the London session today. So let me just draw out the true day. Oh, true day. So we did not trade the London session. However, we did trade the New York session. And we can see price right after midnight rallied, just like the dollar index. It sold off right after 12. So knowing that, we're probably gonna create the high of the day, either in London or New York, right? But as you can see, London session, rally, and then we closed here, but the lunchtime we continued to rally. So then at 7 o'clock, which is the start of that New York kill zone, we see that protractionary stage up, a false move higher, goes into this rejection block here, just like on that dollar index, how it came down to the low. Let me show you guys again. Right here, that rejection block on the hourly. Same thing on the euro dollar, rejection block. So we don't know if this rejection block's going to hold. So as I said, we have to go down to a 15-minute chart, our benchmark chart. And then what do we see during that New York kill zone? 7, open here. We trade down into a down close candle, a bullish order block. This is a buy only because we did not trade up into the draw on liquidity yet. So at 7, you had a buy opportunity, 7:15, 7:30, 7:45, 8 o'clock. I just want you guys to check this out. If I take the mean threshold of this, of this thing, you see, price kind of got to the mean threshold, but didn't tap. But I just want to show if that was like precision right there. But as long as it came in here and then it gave me my sell signal, that's all I was looking for on the 15-minute chart. What do we see? We see a 7:45 blue candle, up candle. 8 o'clock went higher, but closed on the low. These two, well, this body's close and then this body's open. You see that they're relatively equal. So at 8:15, when price trades and stabs above these bodies, that's that rejection block. You can be a seller right there because this is a premium array. The rejection block, a bearish rejection block. It comes up, trades into it, stop above the high or above the rejection block level on the H1. I'm going to be a little aggressive, so I had my stop loss above this high, and as you can see, price traded below this low, stops the break even, and then we look for a discount in the range. And as you see, we had a last down close candle, and this was around 10 o'clock. The news hit it, and we gave back up on the range, and we went into consolidation to end the day. So that might have been like a crazy explanation. I know this is my first video back, guys, but I'm kind of in a rush, so I had to rush this video. But yeah, I want to stay consistent this whole month and post videos and all of that. So for the proof, let's go to the FTMO demo account. As you can see, those rejection blocks, when it got stabbed, I went short, and when price came down into that bullish order block, I closed my position. Going down to the 1-minute chart just to show you guys how it happened. That structure break here. Let me get closer to the price. Price went high into that rejection block, broke the structure, left liquidity and a fair value gap from low to high. And this last, well, you can just use the last up close candle, a bearish order block. Obviously my price, I didn't get the best entry. You don't need the best entry. I just, once price got into there, I just press sell. Stops below, stops above the high. See, optimal trade entry, and we get a nice 3.5 extension. So once it tapped it and came off, tapped it again, just got out of there because the session was over. But I knew that we had more bearishness for 10 o'clock news. And yeah. So hopefully you guys got something out of this. All you have to do, use your daily chart, go down to a H1 chart for liquidity, M15 for entry signal, and then the M1, you'll see the optimal trade entry. So hopefully you guys enjoyed this video, and I'll see you guys tomorrow.